Good afternoon, everyone. Jack McGrath with ntmarkets.com. Well, kind of an interesting day with the FOMC minutes out of the way now. Stocks did not like what was said in the minutes, and it could be an interesting trade. We do have key reversals on the daily charts in the E-mini S&Ps and in the E-mini Dow, and you have a reversal in the NASDAQ. Now, key reversal is just a contract high with a lower close from the previous session, and the objective is a lower low for the next day's session. So today's low was 1506.50 in the S&Ps. You'd be looking for an 06 quarter trade. That would meet the objective off the reversal. But what you have to keep in mind is what a reversal pattern is telling you, that the market's getting tired of the current trend. And if you look at the chart on the S&Ps, we've had a slow grinding type of trade higher. And now the market is the possibility that the market's going to take a pause of this trend. And if you look at the volumes on the up trade, it hasn't been great on the way up. Most of the volumes are just at average at best, and the market has had a nice rally from basically from 1525.75, where that is the top of the gap, of the pattern gap that we've been watching for a while now. So what we would like to see off this reversal pattern is not only the objective being met tomorrow, but then another leg down. And I think there would be a lot of money to be made on this down move. I think it'd be, if the bears come out of the woodwork, it'll be a fast type of move lower, and you still have that pattern gap from 38 1/4 down to 25 3/4, and that pattern gaps most of the time are filled. If it was a breakaway type of gap, you don't have to fill those gaps, but pattern gaps most of the time will be filled. It's just a matter of timing. So we'll be watching that, and also looking at the weekly chart. I know you still have Thursday and Friday's trade, but we'll be watching for a close below 1517, and that was last week's close. For tomorrow, keep an eye on this 0850 level. That was last week's low, and 1510.50 was January 28th's high. So if we can't get back above there, you're looking for some more downside. We start to get back above 1050, look for some type of trade up into the 1517 area. That's where it may even be 19, but that's the sweet spot, I think, is where you'd be looking to resell this market for a short play. Now, also, you have to keep in mind, we've had these reversals off of the treasuries. You had the outside range reversal in the 10-year, and then an inside range last week. Those are two reversal patterns telling you the market's tired of the current trend. We're still looking for higher highs in the 10-year, and the same with the bonds. You had a reversal there and an inside range week. You're looking for higher highs. So 10-year, we're looking for a 130 trade. That's the ending, basically the ending bell for the electronic trade here at 4 o'clock Central. But so that you're looking for higher highs in the 10-year off the weeklies and higher highs in the bonds. So it may come to fruition if you start to see the stock market slide. The bonds should catch a bid off of that. So that's what we'll be watching for the next 2 days. This is Jack McGrath with ntmarkets.com. Thank you. Have a nice evening.